Good afternoon, everyone. My name is Petter Hartman, and I am the CEO of Medicon Valley Alliance. And it's a pleasure for me to welcome you all to Medicon Valley Alliance webinar on early stage funding in life science. Before we start, I would just like to take you through some of the household rules. You may have noticed that you are automatically muted while entering this meeting room. If you have any problems with the technology or the meeting platform, please write in the chat and my colleagues will do their best to help you to solve the problems. If you have questions for the speakers during this event, you're more than welcome to ask them, but please write them in the Q&A function here in Zoom, and we will bring them up at the end of the seminar because we have time at the end of this session to have a discussion, I could say, where you can ask questions. And please also note that this event will be recorded. The Medicon Valley cluster has become the largest life science cluster over the past 15 to 20 years or so. And I guess it's fair to say that life science is at the very top of the agenda in both Sweden and Denmark, with new national life science strategies being implemented. And the Medicon Valley cluster has become a strategic asset to both Sweden and Denmark, not least in terms of exports, employment, and tax revenue, etc. And I think we can expect that this region and this cluster will continue to develop positively over the coming years as well, because we have, in my opinion at least, all the ingredients that we need to be competitive on the global life science map. We have state-of-the-art research infrastructure. We have 9 universities performing life science research in the region. We have Scandinavia's largest pool of life science talents. And last but not least, of course, also a thriving life science industry with many innovative startups. We at Medicon Valley Alliance, our role is, of course, to try to bridge Swedish and Danish life science and try to bring these different parts of the ecosystem together and to stimulate, you could say, collaborations of different sort. We run projects, we analyze the region's development and our strongholds, and also try to compare how we perform compared to other leading clusters, not only in Europe, but also in the US, for instance, and in other parts of the world. And we also try to provide our members with a networking platform and an event platform. And events like this, for instance, is one example, but also our different thematic networks that we run, which offers our members an opportunity to share knowledge and also to get in contact and stimulate the contact between investors, for instance, and small companies, between big pharma, between academia, and also clinicians. And we have 5 different networks that you can attend or be part of as a member of MVA. We have an oncology network, for instance, an R&D network, a medtech network, a microbiome network, and a C-level network. And as a member, you can also be part of hosting a meeting in these networks. So if you have ideas or topics that you would like to discuss in the framework of MVA's network package, then you can contact us and discuss how to do so. You're more than welcome to bring these ideas to us. We have some 300 members today at MVA, and they are quite equally distributed between Sweden and Denmark. We also see a growing number of members from outside this region, from other countries. And it's actually a quite large portion of these members that are startups or SMEs. And for many of these startup companies, the access to early stage capital is, of course, crucial to continue a positive development. And this is what we will focus on today in today's program. And we have today invited 4 speakers that will join us today, and that will both, I guess, highlight some aspects of allocating funding and give some advice on how to focus on value creation in early stages, as well as some concrete examples of funds available in Medicon Valley. And our first speaker is Johan Ny. Johan Ny is the CEO at Ny Consulting, and Johan will present some key findings from his just recently published report on the Scandinavian Investor Climate. So Johan, thank you so much for being with us today, and the screen is yours.
Thank you very much for that. Let's see if we can get this presentation started. So thank you very much, Petter, for that introduction, and thank you for the invitation to speak at this interesting webinar. So for the next 15 minutes, we will have a presentation of the Öresund specific report findings of the Scandinavian Investor Climate report that was recently published by Ny Consulting. We'll go through a brief introduction, some key take-home learnings, and then a focus on Denmark, Sweden, and public markets, and then the future. So, but starting off, we will have just a brief 2 slides on what Ny Consulting does. We were started and founded in 2013, and we, in one sentence, develop, refine, and implement business development strategies for early stage life science and tech companies. More specifically, we lead to a complete early stage commercial validation service that makes companies investable. And if you look at the development of a life science company, we are active within the very first start of and conception of a company, working with the investment phases pre-seed, seed, and Series A, and also companies that are eventually listed at the Swedish small cap lists. And we offer services that establish the market potential in the start, as well as validating the target product profile of a drug company, for instance. Once the market potential is validated in the international value chain that the company will enter, then we have services to develop a valuation model, a go-to-market strategy, partner portfolio analysis, and business plan. And when a company has gone through these variables, then the company is investable. And then we support with fundraising activities, eventually leading to a partnering or licensing. When it comes to the reports, this is the 3rd Investor Climate report that we have published since 2016. And all 3 reports have had the same objective: to uncover opportunities and improvement areas in the Scandinavian life science ecosystem. And we started out in 2016, focusing on the Öresund region, because we had seen in our interaction with both investors and early stage companies that there was a need for increased transparencies, and there was a great interest of investments that went across the bridge between Sweden and Denmark. So we also saw a need for increased transparency and lowering entrance barriers for international investors to come into the Öresund region. So we tried to add to the perspective and opportunities by presenting a report based on interviews with leading investors, both international and regional, as well as the life science companies, business angels, and industry organizations, and corporate finance advisors. That then continued in 2018 with an extended report, including more investors and ecosystem representatives. And also with the notion understanding that the international investors considered not only the Öresund region when investing in Scandinavia, but rather saw Scandinavia as one unit and not individual countries. So when we developed the 3rd edition and launched it in March this year, we included not only Sweden and Denmark, but also Norway. And we also have an extended chapter focusing on both private investments from venture capital funds, as well as the public markets, with a great set of data presented. And you can find all these 3 reports and download them for free on our website. So if we move into key take-home learnings, to start up with that, the Scandinavian life science ecosystem is expanding and has been maturing since 2016 when we started tracking this, this interesting region that we're in. And not only do we have more companies that are investable, but there's also additional investors active here as well, both regional and international. And the growing network of service suppliers that are crucial to develop life science companies. And that is consisting of a wide array of experts that are needed in order to build new companies within the life sciences. So we have seen that the ecosystem is expanding, and also it proved resilient during the COVID-19 crisis during 2020. We're still in the crisis, but the acute crisis in 2020, we could see the sustained investment level, both private and public, that we will get to later. But it is illustrated the strength of the ecosystem that we are in. However, we also know and have seen that the venture capital funds available and active in Scandinavia are too few. There is actually a market and enough cases to sustain a lot more venture capital funds than is the case today. And that has been the case for some time. The situation is improving with new venture funds being created, but there's still a large set of cases with both scientific data package and commercial validation that would be relevant for investments. So, as one expressed it, there is a need to extend the VC asset class to build the momentum and allow for multiple syndication partner options for international investors in search of promising cases. Meaning that there is a lot of international investors active and searching for cases today. But there is a need for additional venture capital funds to act as syndication partners, because they would need to have a local venture capital firm as a lead investor. That is crucial. We also seen that pretty good traction for this type of activities, which you can find out more in the report. But there has been some considerable success cases the past 2 years. Also, one key factor is that Scandinavia should combine each of the Scandinavian countries' strengths to be competitive with other regions in Europe and Asia and the United States. So that's something that really is important. Moving into individual country specifics then, when it comes to Denmark, Denmark plays a crucial part for the Scandinavian life science ecosystem. One of the most important aspects is the fact that Denmark has a complete ecosystem with large companies as engines of growth. So Novo Nordisk, Lundbeck, and Leo Pharma are 3 companies that are crucial not only for Denmark, but also for the rest of Scandinavia. That goes especially for the development of staff and expertise, the allowing access to capital, and also knowledge development and spreading of knowledge throughout Denmark and Sweden and Denmark and Norway. There is also an important early stage soft funding accessibility from both private sources, especially from Novo Seeds and Bioinnovation Institutes with Novo Nordisk as the originator, but also from public sources in Denmark with Vækstfonden and additional public funding sources. And that is really important as well. So these are some of the opportunities that we have seen. And it's also important to mention that all these aspects that we present is one perspective of many. There are additional perspectives, but these are some that we have seen in our interactions with investors during the past 2 years. We can also see, when it comes to improvement areas of Denmark, that even though there is accessibility to early stage funding, there's a need for more. And I guess that's not only valid for Denmark, it's more or less true for all different regions where life science development is made, but it's especially referring to more proof of concept funding, where early stage companies can develop their scientific data packages and also validate their commercial viability. That is crucial in order to become investable and develop a company that is geared for growth in the future. One of the investors had the following quote saying, "I think there is a realization that the more money has to go into earlier to build companies, build a story, and have the money to reach crucial value inflection points." It's always difficult with early investments in Denmark, but you can get a good raise with the right data. And we have seen that there's quite a lot of success stories in Denmark where there has been companies that have gone the private route via venture capital funds in multiple investment rounds and then ended up in reaching the market, which is great and an inspiration for the rest of Scandinavia. We've also seen that one improvement there would be to have pension funds activate funds in new venture capital teams, meaning that acting as limited partners in new venture capital funds. We've not been able to establish that in Denmark or see it. It is a fact in Sweden and Norway, but it would benefit both Denmark and the rest of Scandinavia if also pension funds would activate their funding in new teams as well. We can also see that it would benefit if there were more retail investors active in the public markets. It is a growing trend in Denmark today, but even more retail investors focused on the life sciences would be beneficial. Moving over to Sweden, Sweden is one of the it's a solid market for life science, and it's a country that has fostered a lot of interesting life science companies over the years. Lately as well, it has developed a market for early stage public funding, which has benefited all of Scandinavia. It's also an outstanding academic commercialization system with the teacher exemption that leads to scientists that have complete ownership of their IP that they develop, which leads to exciting opportunities, and also combined with great technology transfer offices at the universities and incubators leads to great commercialization in the end. A lot of promising companies then develop, but also are acquired by international players. And the ideal situation would be to have more companies build value and stay longer in the region. But in order for them to do so, there's a need for more capital sources. So that's where the unique pre-revenue listing opportunities comes in, and also additional venture capital teams emerging. So that has been quite important for not only Sweden, but the rest of Scandinavia as well. We also see a growing network of business angels and business angels funds that can syndicate with venture capital teams, which is crucial. However, additional venture capital funds are needed also in Sweden. International VC teams that chose to establish here have done so before because there is an underserved market for professional capital, but also an abundance of good investment options. So there is indeed opportunities for new VC teams to be started. Even though it's happening, there's still opportunities for more. We also see that the market would benefit from more life science understanding among retail investors. We have a long tradition of retail investing in the stock market, but having more life science understanding will benefit the market long term. And that also, since we see some life science companies are listed very early and take a long time to reach value inflection points. That's why the initiative driven by Sweden Bio and Nasdaq and Spotlight is so important, where increased transparency and understanding of risk has been something that would be more prominent in investment documentation going forward, which is great. Moving over to the public markets briefly, we have some selected insights illustrating the strong performance, even though we had very difficult times during 2020. You could see, for instance, that number of IPOs increased within the life sciences during 2020 compared to 2019. You can also see that the pre-money valuations increased in the last quarter during 2020. There's much more data on the public markets in their actual report, but we thought that this could be interesting to illustrate, but also the rights issues that remain strong despite volatile market conditions. And that was something that was not expected in the start of 2020. In our discussions with investors at that point, a lot of them foresaw a less liquid market during the pandemic. But in the end, in December, it turns out that we had pretty much the same number of rights issues by Scandinavian life science companies by quarters compared to 2019. We could also see, when it comes to marketplaces, that it seems that that First North had the most life science companies issuing rights issues during both 2019 and 2020. Finally, moving over to the future, we have a positive outlook on the Scandinavian life science ecosystem, and especially when it comes to combining individual strengths to meet international competition. Because Scandinavia has a great innovative research system, but there is a need for more critical mass when it comes to established companies that can support emerging startups. And that's why the combination of country-specific strengths are important, such as the large pharma companies in Denmark, the public markets in Sweden, and activation of pension funds resources in Norway. So with that, I would like to say thank you and hand over to the next speaker.
Before we do so, Johan, thank you so much. I think we have time for just a quick question. You talk about the combination of the different strengths that we have in the Scandinavian countries. Are we good enough in pooling this sort of strength when it comes to, present ourselves for the international investor collective, or can we do more to collaborate to raise the sort of interest for the Scandinavian market, or are we too much on our own, so to speak?
I think we can always do more. It's important to emphasize the success cases that are developed in Scandinavia, and we can see that Galactic Biotech is one example where Sweden and Denmark has some part in it on both ends. But I mean, emphasizing and finding common places to move forward would be ideal. I'm open to discuss what that might be, but just the notion that Scandinavia is considered one region and not separate countries, and especially not separate regions, is quite important in order to spur that collaboration, I think.
Great. Thank you so much, Johan. That was highly appreciated and a really good start to put the topic of today into a context, a Scandinavian context and a Swedish-Danish context. Our next speaker is Saurabh Mishra, and Saurabh is managing partner at Fermantra. Saurabh, would you like to turn on your camera and start sharing? Fantastic. Saurabh, you're based in Spain, so you have from an outside looking in perspective at this region. And Saurabh, take it away. Over to you.
Thank you. Thank you very much, Peter. Thanks, Medicon Valley Alliance, for inviting me to talk about value creation in life sciences. So, and thanks to all the audience who are here. I have 15 minutes to talk about the value creation. So I hope I will be able to do justice because life sciences is not just one biotech, medtech, there are several other companies, right? So before I start this discussion, right, about the value creation, I'd like to start with this question. Should you maximize value or value per share? Okay. Now, I wish I were here physically and I would have asked you, each one of you, that would have given me different perspective, but unfortunately I don't have that particular chance to do that. So Let me give you the answer first, and then we will go by the explanation. Assuming that you are not going by, or you are not becoming the next Theranos, meaning if you are doing everything legally and ethically, right? The objective of your company should be to maximize value per share. You know why? Because you could have two companies exactly with the same market cap, 100 million and 100 million, but your value per share could be very different, or price per share could be very different. Think about it. Imagine you are an early stage investor, okay, and you invested at the very beginning in company A with €1 per share, company B €1 per share. Today, company A is trading at €20 per share, company B is trading at €45 per share. Okay, it makes a lot of difference. In fact, it's very funny that I was reading one of the biotech CEOs comment, and it talked about that market cap is the share of the CEO's ego, okay? Whereas with the share price, you fund your kids' education. Actually, it's pretty true. Why don't we take a look at some real case studies, right, to kind of explain this particular point, okay? If you could see here, I have taken this example from Atlas Ventures, one of the VC fund in New York, based in New York. So we have these two companies, interesting companies, Kite Pharma, that was acquired by Gilead, and Juno Therapeutics, right? That was acquired by Celgene long ago. If we see let's see the evolution of these two companies, okay? Kite Pharma started with a 15 million convertible note, right? And it had certain discount, and then they raised 20 million in Series A, okay? And they had another 50 million before IPO. So as a private company, they raised around $85 million, okay, as a private company. Now think about Juno Therapeutics. They started very big. You know, they raised around 180 million, okay, from the beginning. Then they had 134. So as a private company, Juno raised around 314 million. Now, if you compare the share price at which they were acquired, okay, and you could compare the returns, although both are great examples, nevertheless, you will see that Kite had excellent returns, 114 times if you are an early investor, and Juno 22 times. Of course, 22 times also is excellent, right? But what the point of this particular example is to understand whether maximizing value or value per share matters, okay? Now, you could also argue that maybe what if the investor might have invested in, let's say, mezzanine funding or in between something. You could do any mathematics, anything, you'll find that the returns of Kite Pharma is very high. Now, the next question is, how do you then maximize value per share, right? In order to do that, I'll take you to the next concept, okay? It's a return on the invested capital. That simply implies that how much capital you invest, okay, that gives you the highest return. So that means how efficient you are in capital allocation, okay? It simply implies capital efficiency as well, okay? Now let's think intuitively. Imagine you are a biotech company and you raised 20 million, for example, because you need 20 million to move to the next stage. And you have another company who has, let's say, raised 150 million. Let's say both companies are very similar in all respects. You'll find that the company with 20 million has the higher chance of providing, let's say, 20x, 30x, or 40x return in comparison to the company who has raised 200 million. It's first of all, it's simple math, but let's forget math or intuition. Let's get to the data, okay? If you see this particular data, you'll find that the more capital you invest, okay, right, 100 million, 150 million, it doesn't correlate with very high return. In fact, superior returns tend to correlate with capital efficiency, right? That means, so your objective is not to make the largest or the longest train. What you want to have a train that stops at the next station with the minimum amount of fuel. That's capital efficiency, right? So now the next question is that how can I attain that capital efficiency? How much capital should I raise that could maximize my return in the future? Now, there is no I mean to say black or white answer to this. Okay, it also depends on what kind of company you are. If you are a, let's say, virtual preclinical company versus clinical stage company, if you are a product company versus platform based, the strategy has to be different. Okay, but conceptually, you should be raising the minimum amount of capital that allows you to move to the next inflection point. Okay, why? Because if you reach the next inflection point, you could be able to raise the next round, at a better valuation. Okay, instead of raising a large amount of money at the same valuation at the beginning. Okay, because what happens is that once you have the inflection point, your cost of capital also kind of reduces, right? So if you keep raising money at a very large, very high cost of capital, okay, your value per share at the end when you exit, or you provide exit to the investors, versus a company who has raised very strategically at inflection point will be completely different. Now, I don't want to say that only equity capital, you should be raising it, to maximize value per share. In fact, it is very important to combine this equity capital, which is a dilutive money, with non-dilutive investments. Now, you could do, for example, if you are a very early stage company, you could use grants, or let's say some favorable soft loans as well. Okay, as long as it gives you, enough bandwidth to return the money in long periods of time. If you are, for example, okay, another excellent way of non-dilutive funding is partnership, right, with a pharmaceutical company. Of course, for that, you need to have, certain advanced stages. But the point is that even partnership with the pharmaceutical companies, you should be careful that the non-dilutive money that you're getting it, okay, it's not that you should be partnering very early, because if you partner very early, you'll be giving up a lot of value early. For example, if you're a single product company, I think the strategy shouldn't be to partner too early, because that way, you're giving up, a lot of value to pharmaceutical companies early, right? If you're a platform-based company, you could kind of partner early, for example, for one asset, okay, that gives you enough upfront fee or non-dilutive money to take that particular concept, let's say product further. So imagine a company who has raised, let's say, 8 million or 10 million in VC funding. It has kind of combined this dilutive funding with a partnership with let's say, pharmaceutical company. I think that's a great start to maximize, value per share in the future. Okay, so to summarize these two concepts, I think first of all, it is important that when you are the CEO of the company, your objective should be to maximize the value per share. Okay, and how you can do that? You can do that with being very capital efficient. Okay, and gone are the days of 80s or 90s, right, where if you have abundant capital and if everybody is giving you enough capital, your objective was that, okay, you take as much money as you can. Okay, now that concept is not in fashion. Okay, and it's very intuitive and easy to understand, right? So today, if somebody, imagine you would need only 20 million, but because of your attractive asset, somebody or investors are ready to give you 80 million, for example. Should you take it? Now, having the objective of maximizing value per share and being capital efficient, you should be, and take into account whether you are a product company, platform company, or different kinds of, depending on your situation, you should take the right decision at that point of time. Okay. Even it happens with IPO, for example. If you are going IPO, you need 40 million, but you're oversubscribed and you raise 60 million at the same price, you are diluting it severely. Okay, so it is very important. This part plays a very important role in the value creation in the future. I would also like to talk a little bit, I have 6 more minutes, I see, and a little bit about risk, how you can manage the risk that could also lead to value creation. It is very important that investors try to ensure that the next new dollar that you invest at a lower risk. Now that seems very counterintuitive. Why? Because as we move forward, our scientific risk starts decreasing, but our financial risk moves up. Okay, so now how can you manage those risks? So now we have several risks right now we are talking about. One is scientific risk, one is financial risk, one is commercial risk. If you're talking about commercial risk, I think there shouldn't be any loophole in commercial risk, no matter you are supposed to be launched 8 years down the line. But if investors see that there is even a small problem in the commercial risk, I don't think you will be able to raise money. That's the first basic fundamental point. In terms of managing the scientific risk, okay, the way you could manage is to have the hypothesis, your hypothesis tested at a reasonable cost, before you get into the next phase. What I mean by that is, for example, let's take the example of this company Stromedics. Okay, so there was this antibody STX100, which Biogen was planning to. They wanted to basically tease out phase 2 data so that they didn't have to invest in expensive phase 3 trials. And as they were not able to do that, so they licensed to a company called Stromedics. So what these guys did, that they understood that the clinical hypothesis, that this antibody slows the progression of the disease, it's very difficult to prove. So they worked on their biological hypothesis that what if this antibody attenuates TGF-beta signaling activity in lungs, and if they can do at 1/10 of the cost, okay, then here you are, right? So, and that's what they did, and they were successfully acquired by Biogen. It's another story that after that in phase 2, Biogen had to kind of stop the trials because of the safety issue. But as you know, the value chain in the life sciences is fragmented, so we always focus on that particular fragment of the value chain and see how we can de-risk ourselves. In terms of financing risk, what I would like to quote one very interesting point made by one VC in one of our events that we organized here. Was there are two companies, A and B. Company A has a superior product. Company B has an average product, but company B gets funded. Company A does not. It is a very, very important point because many of the biotech companies also fail because they don't get properly funded. Okay, it's not only because it's not you might not be getting funded in the beginning, but there might be a chances that you're not very agile enough to raise the money, or spend a lot of time in investors relations. That might also lead to not able to raise money. For example, one of my clients asked that, okay, I'm planning to do an IPO of 40 million. How much money I should be raising before that? So the way you view the risk is that what happens if IPO does not happen because of a certain macro condition which is not under your control, for example, right? Do you have sufficient amount of money to move forward for another 6 months or 1 year down the line? So you must be taking into account that particular factor in order to raise money. So as you could see, there are several ways in which you can manage risk. And if you are able to manage risk well, that means that you'd be able to take more risk. And as you get adapted to taking more risk, you might be able to create more value as well, right? So to summarize, in 15 minutes, I think I'm almost done, is maximizing value per share, combining dilutive and non-dilutive funding, managing capital efficiency, which is very, very important, and managing the risk of the company, both scientifically, financially, commercially, will allow you to create value. It's a process, but if you focus on all these aspects, I'm sure you'll be able to give better returns for all shareholders and all stakeholders as well, right? Thank you very much. And if you have any question, I'm very happy to kind of take over.
Thank you so much, Saurabh. Very interesting, and I'm sure we will continue the discussions at the end of this seminar. We will continue just to make sure that we are on schedule. Our next speaker is Anna Giselsson. Anna is investment manager at Almi, Almi Invest Syd. Anna, please turn on your camera, and you're welcome to start your presentation. And you will talk about, of course, tell us a little bit more about Almi as one of the investors that you can approach to get funding. Anna, over to you.
Thank you so much, Peter. And thank you for inviting me to talk here today. And I will represent the perspective of an investor. And in this case, it's the most active early stage investor in Sweden, which is Alma Invest. So our organization now consists of 8 regional funds and 1 national green tech fund. And we invest every year in around 50 companies, and this is nationally and within all sectors. So around 12 of these investments yearly are within life science. In total today, there are around 375 companies in our portfolio, and we syndicate in our investments, which leads to a stability for the startup companies. And I will come back to that a lot more. So by syndicating, we also point other investors towards the early stages of the companies where there is a huge need to attract more capital. We manage today around 350 million euros in all of these funds together, and we are co-funded by the European Union. Our 43 investment managers are divided not only over the whole country of Sweden, but also within different areas of expertise, which is mainly tech, industry, life science. So according to a report from PitchBook, Alma Invest ranks as the #1 most active startup investor in Sweden. Also, it ranks as the #1 most active VC in the Nordic countries and #7 in Europe. And the definition in this of the activity in this case is the number of new investments per year. Our mission is to complete the market that is out there and to bridge the funding gap to the private VC. And this means that we often invest earlier in a venture and also accept a higher risk than the private venture capital is willing to do. So moving into the life science part of our portfolio. We attract our deal flow from all life science nodes, and that includes the universities and incubators. Every year, the whole organization of Alma Invest is contacted by about 1,200 companies looking for investments now or in the near future. So only about 4 or 5% of them actually are approved every year. Then during our time as an active investor in the companies, we dedicate ourselves to develop the companies and to give access to our network and to help the company grow. In the later stages, we are willing to take a back seat when other VCs come in, and we accept dilution later on. Or we exit the venture. So since 2010, there have been 300 exits, and 80 of these companies are listed, and mainly on the Swedish Nasdaq. Okay, we have different slides, I'm sorry. So, the life science portfolio, I'm just going to skip it. That's why we have different slides, I'm sorry. So this is the team of life science investment managers. There are 8 of us, and we are divided regionally across the country. So we have colleagues from Matthias in the north, to me and Helene and Per in the south. And also we have colleagues in Uppsala, Stockholm, and in Gothenburg. So between us, the 8 of us, there is a lot of R&D, startup, and also business development experience, as well as from venture capital. So what is actually venture capital? So maybe we should settle that, and it is central to understand if this form of financing is right for your venture. So the thing is that startup companies don't have access to the capital markets. So venture capital is therefore invested in the early stages, usually in very scalable ventures where we see a big potential. So the chance for high return on, there is a chance for high return on investment, but also the risk is higher. It is important to know that when you bring in external capital, the founders need to let go of some of the control of the company. And in return, they can and they should bring in smart money to help the company develop. So the goal of a venture capitalist is to sell their shares within a limited time period and to make a positive exit. Through an exit analysis, we have studied our best investments and our worst investments over the years. And so we have pinpointed a few crucial factors. So main success factors for startups are a few of the following. Founders have specific industry experience in the field where the venture is. So the team can never be emphasized enough. And I think you have heard that before. We also want to see that the founders have skin in the game. And by that, we mean that they have invested both time and money in this company, and also that they will continue to do so over a number of years, mainly time and dedication, of course, because now the financing will come from other sources. Young entrepreneurs perform better, and this is even though they, of course, have less experience from the industry, which we said was so important. But this is what we see. Research-based startups perform better, and innovation based on advanced technology perform better. A third success factor is that the company addresses growth markets. And finally, that the startup has brought in smart money, which means experienced and active investors. The criteria that we choose our companies after, of course, align with what we have seen in this type of analysis. So we at Alma Invest, we invest in startups that have a scalable and innovative business idea and with an international growth potential. They address a clear customer need. It's unlisted companies that we are looking for, of course, but with a clear business model still. The company should have a feasible go-to-market plan and exit strategy, even though they are not set in stone or finished in any way. We want to see a strong team with global ambitions and that the team is coachable and ready to bring in smart capital. So the investment process looks a bit like this. I talked about the deal flow, and when we funnel down the deal flow into the most interesting cases, we go into due diligence work, where we look at the team, of course, always mention the team first. Also the financial strategy and the capital need for the future, the market, the customer need, everything put together. So in this stage, many ventures are terminated in our pipeline. But with the most interesting ones and the most suitable also for venture capital in early stages, we go to an investment decision, which is made by an external committee. So after that, we have the mandate to invest in this company, but then we go further into the due diligence process to look at legal aspects and if there's anything that could stop this investment. Otherwise, we agree on a shareholders agreement and an investment agreements. So these contracts, they stipulate the terms and conditions of the investment. So after that, there is an average of 5 to 7 years before we exit the company. During this time, as I mentioned, we are an active owner. And the goal is to sell our shares with a return. Either we sell to financial players or to industrial players, or it could be through a public offering. Okay. And of course, this loops back to investing in new and interesting opportunities. So what does Alma Invest contribute to the startup, except from the monetary investment, of course? As I said several times, we're an active owner. So in most cases, we do that through a board position. We are committed and we have different experience that we bring into the company. Also, we provide a relevant network among investors. And we contribute to the credibility of the company early on. The life science portfolio today consists to a large extent of medtech companies. One of the reasons for that, I would say, is the limited total amount that we can put into one venture. So our sweet spot for one investment object is up to 1 million euros or 10 million Swedish crowns. So we syndicate, we're private investors, and we can cover 50% of the round, which is usually a seed round. Now, to bridge the pandemic, last year we received 400 million Swedish crowns, 40 million euros extra to invest. And life science is a prioritized sector within these extra funds. So for a limited time right now, we can put a bit more money into each venture, up to 1.5 million euros. And also we can cover up to 70% of a seed round. But this is an exception. So we see a need for a Swedish National Life Science Fund to cover the funding gap that is still there, for example, for pharma and biotech ventures that have a larger capital requirements. So as Johan mentioned just a while ago, Scandinavia is underserved by venture capital funds. And the explosion in listing events in late 2020, it also implies a substantial shortage of VC funds in the Nordic countries. So public VC like Alma Invest, it points to and drags along the private investors. And so actually our portfolio companies are founded to around 85% of private investors, but through our early investment, we see that this early investment is often crucial to receive the rest. So by increasing the public early investments, we can expect the private VCs to increase also. Okay, have 2 minutes left. Okay, I will then let you look for 1 second at our co-investors and follow-on investors. You will recognize some of the names, but this is just a small selection of our network. So today we work from a second generation of regional funds and from the first generation of a green tech fund. So our ambitions now is to raise the third generation of the regional funds, the second generation of the green tech funds, but also a first generation of a life science fund that, as I talked about, can bridge the gap for pharma and biotech up to, we think, around 5 million euros. And I want to invite you all to please ask questions here today and contact me, both for syndication and for your venture. if you're looking for venture capital. And through social media, our webpage and our newsletter, you can follow the stories that we publish with a bit of tips and tricks for early companies, and also some case stories that might be interesting. So thank you very much.
Thank you so much, Anna. Very inspiring and very nice presentation. I can see that there are some questions coming in the Q&A function, but we will come back to that later on. And we will move ahead to the next speaker of today, which is Camilla Petreiser Hansen, principal at Novo Seeds. Camilla, you will talk about identifying, building, and investing in sustainable startups. And I will leave the floor, or not the floor, but the screen to you, Camilla. So please take it away.
Okay, here we go. Sorry about the delay. My fingers aren't as fast as my mind sometimes. Anyway, thank you. Thanks, Peter, and thank you for inviting me, and thank you for the people listening in. So as Peter mentioned, I'm a principal in the Novo Seeds team, and this is the early investment arm of Novo Holdings, where we focus on early investments and company formation in the Nordics. And I'll talk I've structured this talk to sort of focus on how we go about doing that. But I figured before that, I would just go into briefly walking you through how Novo Holdings fits into the ecosystem of Novo. Because sometimes if you're not completely familiar with it, it can be somewhat confusing. So I will just take a minute to talk about that. So Novo Holdings is the holding and investment company of the Novo Nordisk Foundation. So we manage the assets of the foundation. In 2020, that asset was built up to about $75 billion. So we've been doing quite well for the past few years, in spite of the pandemic, actually. Of those assets, about 2/3 belongs to the Novo Group, and that being Novo Nordisk and Novozymes. And we have a controlling stake in these companies, as well as the board seat to govern those companies. On the investment portfolio side, it's about 1/3 of the assets, and this part is divided up to two parts, you can say. One is the life science investments, and one is the liquid and financial investments that look into things that are outside of the life science area. We invest about $1 to $1.5 billion in life science investments annually, but that's of course taken from 4 investment groups that have similar, you can say, area focus, but very different maturity stages. So we have the principal investments focused on commercial large corporations. We have Novo Growth that focus on companies in the growth phase. We have Novo Ventures focusing on typically companies in the clinical phase. And then Novo Seeds, which is where I'm located, that focus on company creation and early investing. And maybe just to focus in on what we do in Novo Seeds. So we have an annual investment budget of around 900 million krona. And we have 3 different, you could say, pillars that we work from. One is the Biotech Investments, where we invest, as I mentioned, into early companies, or we identify, build, and create and incubate new companies. And we do that in combination with an entrepreneur in residence team, which I'll come back to. Out of this pocket, we usually invest up to about 20 million euros per round, of course, depending on what the round needs and what the company needs. And we always try to syndicate in the larger rounds to make sure that we get good brain power around the table in the boardroom. Our current portfolio as of January was 27 companies, and these companies span a big, what do you call, a vast difference in terms of therapeutic area as well as stage of development. So I think, I don't think I brought a slide in terms of which specific companies we have in the portfolio, but we span many different therapeutic segments, and I think about 2/3 of our portfolio is now in the clinic, and then we have 1/3 in the discovery or preclinical stages. In terms of the fund of funds activity we have a 100 million euro mandate to invest in VC funds, and that's exactly to address the gap that some of the previous speakers have spoken to, really to make sure that we can funnel some money back into the Nordic system so that all these early stage companies can actually get the financing needed and grow. And we don't want to be the only people out there putting money into things. There are other people that also have a good eye for good investments. So we want to make sure that we nurture that. And under this umbrella, we've done 6 investments to date. And then finally, we have a Repair Impact Fund, which is a $135 million mandate that was actually created by the Novo Nordisk Foundation directly. And this one is more of an impact fund, so a little bit different success parameters in this one. But this was created to really combat the antimicrobial resistance challenge that we have in front of us in the future, which of course COVID-19 is one of it's been one of the tools also where you can see how that can become a problem as we move forward. And under this bucket, we've done 9 investments to date. Okay, so actually I did include a slide with all the companies, at least the logos. So this is the company portfolio that we have right now. And as I mentioned, it spans various therapeutic areas and various levels of maturity in terms of development. We also have a few on the medical device / e-health side, and then we have a few in the bioindustrial segment. But the vast majority of our portfolio is sort of in the true pharma therapeutic space, because that's where we see a lot of value being created. So maybe just to turn over into how we work with startups and how we do the company building. And I think it starts with, you know, the innovation ecosystem that Novo Seeds is part of. So of course we have assets from pharma and biotech that gets funneled to us. We have incubators that incubate great startups. We have assets from academia, and that's sort of the tools we call the raw material that we have to work with. But that all then funnels into an ecosystem of a great network, and of course we have, just being close to the Novo Nordisk Foundation, we have a great ability to tap into, you know, what science is groundbreaking and really cutting edge in terms of where fields are moving in certain areas. We also have a strategic relationship with BII. We're part of some of the selection committees that they have, and so we get a good outlook in terms of what kind of companies are created there and what could provide value in a Novo Seeds perspective. We have a very strong and active network of advisors and consultants that we work with intimately when we evaluate and create these opportunities. And then, of course, our BioOrigin network, which is our entrepreneurs in residence, are crucial to really being able to push these companies forward. And I'll get back to that in a second. What we spend a lot of time on is looking at the strategy and building the teams. And we do that with the collaboration of our BioOrigin and advisors and consultants. But also our connections to other syndicate partners are really important in terms of understanding what provides the right value proposition and the right key value driving data points needed to actually create something investable and something sustainable for the future. And all this sort of comes together in a financed newco, you could say. And it's not an endeavor that you do overnight, and it requires a lot of manpower, and that's evident, I think, from the team you see here. We are 13 people working on this. We usually work in teams and have, of course, different areas of expertise. Our background stems from strong scientific backgrounds, but also BD, more operational, sort of a big pharma and biotech backgrounds, and various functions there. And then, of course, we work with our entrepreneur in residence program, and right now here you see, let's see, 8 people, but we have more on the roster, and we work heavily with these, where they help us do due diligence, they help us create the business plans, they take CEO roles or CXO roles, and they also take board of director roles. Really, whatever role makes sense to push these opportunities forward. And really, what's important, we have these on sort of a more formalized agreement, but of course, as I mentioned before, advisors and consultants on a more ad hoc basis is also very, very important for us in our company creation efforts. So I figured that I would just show a process slide to try to maybe help describe in more detail how we work with startups and academia and pharma. And so we created this slide to sort of show how the various steps stick together. And so we, of course, on the top here, we have assets from pharma and biotech. We have a continuous dialogue with them to see if there's anything of interest here that we want to pursue. And likewise, we have ties in with academia to understand what goes on at universities. And these discussions are, of course, not only with people in the region of the Nordics, but it's also beyond that. We really try to understand what goes on a global scene. And in fact, 1 or 2 years ago, we started sort of a data analytics initiative where we set up an analytical AI framework where we analyze scientific literature, patent literature, tweets, and everything what goes on in various scientific fora to understand what strategic areas should we focus on within science to get to really these sort of cutting edge, in front of everybody, scientific discoveries that we want to funnel into our companies. And the outcome of this really dictates where we try to build companies. Of course, we're also opportunistic, so if something great comes along, we will also take a look at that. But we really try to be clever around how to build sustainable startup companies that can have a long-lasting value proposition. Once we have the assets and once we have a strategic area in mind, we work with our executive in residence team to really understand, what assets perhaps to pool or how to build a plan around an asset. We think about the strategy, and that really defines what kind of investment we end up putting into the company. Now, we sort of have 2 ways of doing that. We can do a smaller investment in the beginning to help fund sort of key value creating milestones or answer maybe key commercial questions that you need to have answers. So some key uncertainties or activities that really can drive valuation from a financing standpoint. And we can either start with that, or we can go directly to a Series A, where we always try to syndicate with other partners, preferably European or American or global, so that we can get foreign capital to Denmark. And I think we've had a very good track record in terms of getting international investors into the Nordics. Now, so this is the sort of typical high-level company formation path we follow, but of course we see other companies that have been incubated in various ways, whether it's BII or whether it's some of the Swedish incubators, or whether it's an American incubator where the company wants to move to the Nordics. There are opportunities like that of course come our way, and we also evaluate those on an opportunistic basis, and there's always very good opportunities in that bucket as well. I was just trying to be conscious of time here. Not sure how long I have left, but Peter, please just let me know if I go over time. So just to maybe focus a little bit, the slide before was the process, and now looking a little bit about the foundation. And I think it overlaps with what Alma Invest was also talking about. But given that we are therapeutics focused to a large degree, we do have a very strong scientific interest. And so what we're looking for is unique ideas and products that address unmet needs, and where there's a very strong scientific rationale or mode of action, and very strong data to support that mode of action and the relevance in a certain disease or pathology. Another really important component is that we have people that we can work with that are motivated and focused, because it really is a team effort to establish a new company and get a startup off the ground. There are some other ingredients, of course, and as a VC, we always try to de-risk as much as possible. So what we want to make sure is that we have an opportunity where the science can use translatable models so that we can move them from the preclinic to the clinic in a straight line, which is of course not always easy, but we try to do it as best as possible. And we really need to be able to see that you can obtain this proof of concept in humans in a fairly straightforward way, even though science is of course never straightforward. Another thing to look for is market accessibility and competitive differentiation. You know, Me Too products tend to not create as much value as unique products. So that's of course something that we are very keen on obtaining. And then we need to have strong patents or patent possibilities, at least in terms of securing what you move forward. Finally, the exit potential is of course in every VC's mind. I think Novo seeds, because we are long-term investors, we have sometimes a longer runway than others, but we do have to be able to see that there is a exit potential in whatever opportunity we invest in. For a typical pharma asset, that could be at a point, an acquisition by pharma, an IPO, once you have clinical proof of concept, maybe already at a phase 1B. But for platform plays and in certain indications, you can actually also get to that exit on preclinical or earlier assets. So kind of depending on the indication and the type of opportunity in front of us, we have various options, but it's important that the potential is at least there in the path there. And then finally, I've noted here a plan. It's always important that there's a plan, but because this is company formation and creation, and even when we get companies that have been incubated, we very often work with the team to slightly change the plan to make it fit with the VC mindset and sort of make sure that you're always focusing on value creation and working towards the exit, whether that being building a sustainable IPO-able company or whether it's more going an M&A route. And I think my time is almost up, but maybe just a few examples where our company creation has been successful. I've highlighted here Draupni and Nuna. I think HEMAP is another recent example that has been worked quite well for us. What's common for them is exactly what I mentioned before, that it's great science that was, validated and where the data really supports the hypothesis. But we also have very motivated founders that work with us to really create that project plan and the value proposition, the commercial perspectives, get that whole storytelling into place so that we can go out and do a proper syndication with large rounds. And I think those are really the key ingredients to a successful company creation with Novo Seeds, at least, is that you have to have, I think I noted here, co-creation and trust, and you have to have engagement from everybody. And then of course, having advisors are very, very important. And for these companies, we also work very heavily with the teams to make sure that you have the right advisors or board members or management team members that can really bring the company to the next level. I think that's about it for me. But you have my email here at the bottom if you have any good ideas or any further questions. And then back to you guys.
Thank you so much, Camilla. Really, really interesting. And I think your slide with an overview of the innovation ecosystem was really helpful also to understand the system, which can be quite complex from time to time. We have a lot of questions coming in actually, and I hope that we can manage to go through them all. I would like to ask all the speakers to turn on the cameras again, because we have questions for all of you. And I would actually like to start with you, Johan. It was a question that came from Maria Fernanda Bucaniel. She is asking about the data on how much of the investments made in Scandinavia that comes from foreign investors not located in Scandinavia. Do we have any data on that, or how we perform in that sense?
We have in the report, we managed to find data on number of investments made by external international investors. And I might add that there most definitely would be more investments or investment events, but not all of them are public or publicly available to us. But we have seen on page 11 in the report that there were 13 investments by US investors, 9 by UK-based, and 6 by German-based investors last year. And then we have additional international investors teaming up from there. But one way would also be to, we would like to have final numbers as well. How much were those investments in numbers, as in how many euros were spent by them. But as of yet, we have not been able to come across the complete number there. But it is an increasing number of investments being made by international investments. And as Camilla mentioned, having Novo seeds and established venture capital funds being lead investors are crucial for them to come to the Scandinavian countries. So maybe you, Camilla, also have some insights on international investors and their interests in the Scandinavian countries.
So yeah, I mean, the good thing is that we're seeing more and more interest. I mean, it's really becoming, you can tell that there's much more capital around, and we have a lot of US investors actually coming to Europe and to the Nordics to get to these opportunities, and they have a very early appetite for startups, especially for platform plays, I should say. And so I think it's becoming more and more, and I think it's great that that kind of international capital is being deployed here. From a Novo Seeds perspective, we always syndicate, not only from the perspective that, of course, it de-risks your investment, we can get other people to invest with you, but also just from the perspective that if you have really good people around the table, smart money around the table, they bring in the human resource of themselves, right? The knowledge they have, the external knowledge they can pull in from comps, but also the network they have in terms of getting the right individuals, the right management teams, the right board directors, etc., onto the team. So we think it's very important to have these international investors around.
Sarab, being placed outside this region and have this outside looking in perspective, what would you say? What should we do to be more attractive for international investors to look in our direction? Do you have any advices for us?
Well, I think the investment opportunities arise when you have success stories, right? So when you have more success stories, then the investors start pulling into that particular country, right? So I think anyway, I with some of the VCs, local VCs, I am in touch. I think there is anyway syndication that is already happening in that, although in a very the percentage-wise small amount. But I think step by step, I think once there is more success story, then I think the other European investors will also pull in.
But do you share that sort of gut feeling that the interest is increasing for the Scandinavian startup system from an international
Absolutely. With I could share my point of view based on my interactions with some of the investors, VC investors that I have here in European region. Of course, some of the hubs that are being considered interesting for investments are Switzerland, Barcelona. In Scandinavia, you have Lund region. So these are the regions, and Copenhagen as well. So these are regions already being named in the top European investor list. So I think it does give an impression that a lot of stuff is happening in biotech and or life sciences sector in Scandinavia.
Great, Anna. You mentioned the public life science, the National Life Science Fund, the idea of creating a life science fund. Can you elaborate a little bit on that? I think that sounds really interesting. And since we don't have a Novo Seed and the Novo Nordisk Foundation in Sweden, I guess we need some extra muscles from the governmental side, perhaps.
Exactly. No, we don't. But I'm not that up to speed with the Danish situation, but I think actually there is a similar discussion in Denmark with a National Life Science Fund that has been postponed. Anyway, I think we are in many ways in the same situation, but we don't have the Novo Nordisk Foundation. So yeah, we simply see the need to be able, so as I say, we bridge the gap to the private VC capital, and that's really the reason for once forming Alma Invest. So if we could do that a bit more extensively and to a later stage, that would give the life science companies a better chance to actually get to the private VC and get shorten the time, of course, to the market or to the deal, but also to increase this survival of the companies. So it really is the valley of death. And
So
we don't
this
want
is-
good
Can I just add
ventures
one
to
thing?
fall.
Can I just add one thing just to make sure that it's clarified? So the Novo Nordisk Foundation covers the Nordic region. So it's Denmark,
Absolutely,
Norway, Sweden,
absolutely.
Finland, and the same with
Yeah.
Novo Seeds, just so that people are clear on that.
Yeah.
And that's really good to get that clarified, Camilla, because there was actually a question to your slide of the companies that you had in your portfolio. And there was a question from Ebba Foreus at the Smile Incubator in Lund. She asked from which countries these companies are located in. Is it also Swedish companies?
Yeah, I would need to pull up the slide. We have Finnish companies. I believe we have Swedish companies. Skellefteå was a Swedish example, right? So there's a high level of Nordic companies in there. There's a few European ones as well, because we did have at one point some investments there, but now we're going back to our core strategy of really doing company formation and early investing, and hence we want to be closer. So we're back to the Nordic region, focusing on that primarily. But yeah, you know, right off the bat, I can't remember whether they're located in Sweden, but certainly there has been companies there, and there are in Finland and Denmark and I believe Norway as well, but I would have to double check. Sorry about that.
That's absolutely fine, Camilla. I think the bottom line here is that you invest in not only in Denmark, of course, but in other countries as well, and in Scandinavia in general.
I can add that the Novo Foundation is on our slide of follow-on investors. Still, we experience this gap, and I think actually the situation in Denmark is quite similar. But that's.
Peter, I would just like to add a quick thing that investors always like proximity, and it's not the problem only here in Nordic, in everywhere. Even if you see California, you'll find investors in the north not investing in the south, right? So I think this is also a proximity problem, and I think one of the only solution is to have more funds there. Like for example, recently there was I think Stefan Kristgau had started this EIR Ventures. You know, he's also an ex-Novo Seeds, right? That covers both Swedish and Danish, I think, companies. So I think the answer would be to have more companies and more funds, you know, more people coming out and creating more funds to kind of fund who are in their proximity.
Anna, we had a question for you while you were presenting, and it's coming from Antti Virtanen. What are the main criteria to select the companies you invest in? Can you elaborate a little bit more on that? What are you looking for in terms of criteria? The most important ones, maybe I should say, because we are running out of time.
I mentioned a few, but it's always the team. I think most entrepreneurs have heard that, but also it's the case itself. It's the scalability, the market potential, it's the IP. If there's not IP, it's know-how or other barriers to competitors, and also the exit potential.
And Camilla, while you were presenting, there was a question from Michael, and he asked, you talked about, you know, you mentioned that biotech and pharma seems to be the focus for you, but what about medtech startups, Camilla? Why don't you focus so much on that?
So we have a few medtech companies in our portfolio. I think the common denominator with them is that there's a very strong scientific rationale and story behind it. So it's you could say from both construction and from a mode of action, it's sort of a complicated product. And I think that's maybe one of the areas that we could consider. The challenge with medtech is that for you to realize your VC investment and return, you have to be typically closer to market than what we go in as early investors. So you have to maybe be, have a CE mark already in first sales, et cetera, et cetera. And then it's a little bit of a different story than investing in an academic spin out. And unfortunately, what we're seeing is that it's just difficult to get other VCs to invest and realize your return on investment in those areas if you go in early.
Great. I was also asking about, and this I guess goes for all of you, when it comes to what are the biggest mistakes the companies are doing that you see, and I guess Camilla and Anna is probably ready to answer, but maybe also use Saurabh, and from your perspective, Johan, who would like to start? Saurabh, perhaps. What are the biggest mistakes?
Well, I think in my personal experience, understanding that the delay in execution of your process, right, leads to implicit loss in value. Okay, what I mean by that is that we have to understand that many things take more time than we always estimate. So we have to prepare for that. I'll give you a quick example. When the COVID started, we shared examples that there are two risks right now for you, okay, to some of our clients. One is R&D risk and one is funding risk. R&D risk, because what happens is that, let's say if they imagine because of the lockdown, CRO is closed for 4 months, okay, that doesn't mean that your R&D will be delayed by 4 months, because there is a huge non-linearity here, okay, because there is a lot of interdependence. And it has happened, for many of the companies, they were not, for 2020, it was like almost nothing, very few stuff were done in the R&D. So I think planning that stuff that to execute all the phases on time, I think I have seen several companies delayed by 1 year, 2 years on their phases. So I think that should be the mistake, I think, in execution part from my side. Of course, there are a couple of others, but I think this would be main, I think.
Great. Anna, would you like to add?
Yeah, I would think there are, of course, as many different ways to make mistakes as there are ventures, but everyone's individual. But I think maybe to not have the short-term or long-term strategy in place when you go out and look for investments. So you might attract the wrong kind of money, as we call it, not the smart money, and also to be in a hurry. So when we are contacted, we have a process, for example, that takes some time, and we do it very thoroughly, which can strengthen the companies. But if they don't have the time, it's just an annoyance to them, and it won't work. So be prepared, have your strategy, the financial strategy also way ahead of when, not in a panic mode.
Camilla, do you have anything to add on this question? I think what's been said already is very comprehensive, and I agree with both comments. I think one, I don't know if it's a mistake, but one thing that we often see where it's difficult for us is people pitching something where they haven't thought through the value proposition, right? So you can have really strong, excellent, cool science that everybody's just so excited about, but at the end of the day, there's just not there's not really an uptake of it anywhere. So it's really important to understand, what you can use your science for. I think for us, that's the starting point. That there's lots of other things, I mean, and that can be, but I think that's the core actually of what we need to see, because once you have the value proposition somewhat clear, then we can work with that. We can help create everything else. So that would be my one message.
Fantastic. Thank you so much. Johan, you will have the last word here. And I noticed that you finished up your presentation with a very positive outlook for the Scandinavian investor system. Could you elaborate a little bit on why you're so optimistic, and just a few words about the future?
Well, thank you. Well, first of all, we see that there is growing number of very good companies. And when it comes to just briefly on common mistakes that we see is that you often underestimate the commercial perspective, as Camilla alluded to. Having a commercial understanding of where your company will fit in the markets and why it is important, what kind of unmet medical need you will meet is crucial. And we participate in developing that. And also making sure that we have the right scientific understanding and a scientific data package with all the right killer projects performed that are relevant for value creation. And when it comes to the future, we're positive because we have seen a positive trend since 2016, where the increasing number of good cases and success cases being emerging, and also new venture teams being created, and new academic research being commercialized. So that's why we see that this is a positive development that we hope will continue. And as we hope we can combine the strengths of each of our Scandinavian countries, we can also be more competitive compared to other regions in Europe and the rest of the world.
And this will be the final words. That was a very nice and positive conclusion, Johan. I fully agree with you. I would like to thank all of you for joining us today. It's been really inspiring, and I think we have provided the audience with some really valuable insights and ideas on how to strengthen their cases. I hope that we will be able to meet soon again, hopefully also in a physical setting next time, so we can meet and network. But until then, I would like to wish you all a great afternoon, and see you soon again, and take care. Thank you so much for today, everyone.
Perfect. Thanks a lot.
Thank you very much.
Thank you. Bye.
Bye.